Hello everyone, welcome to Commerce Guide. This is Pranali. In today's video, we'll be discussing the golden rules of accounting. We will start with the types of accounts and then go towards the golden rules of accounting. According to the double entry system of bookkeeping, there are three types of accounts that help you to maintain an error free record of your journal entries. These three accounts are real account, personal account, and nominal account. Each account type has a rule to identify its debit and credit aspect called as the golden rules of accounting. So let's begin with the first type of account, that is real account. A real account is also known as a permanent account and it consists of all the assets and liabilities. Real account mainly comprises of tangible and intangible assets. So tangible assets are the fixed assets of the company, that is a tangible asset has physical existence and can be touched. For example, furniture, land, building, machinery. So these all fixed assets are known as the tangible assets of the company. On the other hand, we'll see what are the intangible assets. So intangible assets are not physical in nature, they cannot be held or manipulated. So tangible assets can be touched, intangible assets cannot be touched. For example, goodwill. Goodwill is the name or reputation of the company. Next is copyright. Copyright is a type of intellectual property that gives its owner right to copy. So such type of assets which cannot be touched but still are the assets of the company are known as the intangible assets. So we'll see few examples of real account. Cash, accounts receivables, fixed assets, accounts payables. So such assets and liabilities come under the real account. So now let's go to personal account. So a personal account is also known as a temporary account. A personal account relates to persons. Now here there are three types of personal account. First is natural persons. So natural persons are the persons who are the individuals. Individuals like it can be Mr. Ram, Mr. Kumar, okay, Miss Pooja. So these are the persons or the individuals known as natural persons. Second are the artificial persons. Now, artificial persons are not the individuals, but they are recognized by the law as a legal person because they have certain rights and liabilities, such as companies, government bodies, hospitals, banks, etc. Okay, it can be any companies like Reliance Company, Tata Company, or any hospitals or banks like SBI Bank, IDFC Bank, any persons who are not the individuals but they are the artificial persons here. Third are the representative persons. A representative person is a person who represents another person or group. So these are the three types of personal account: natural persons, artificial persons, and representative persons. We'll see few examples of personal account. Loan to Harry, Mr. Rahul, Tata Iron and Steel Company Limited, Ravi, a creditor. So the persons or the companies come under the personal account. Now we'll go to nominal account. The nominal account is also known as a temporary account, and the nominal account in simple terms includes incomes, expenses, profits, and losses. These components actually do not exist in any physical form, but they actually exist. For example, during the purchase and sale of goods, only two components directly get affected. That is money and stock. Okay, stock means the goods. So when we purchase the goods, in return we should pay the money. But apart from this, we may incur profits and losses out of such transactions and we might incur some expenses for these transactions to happen. So these secondary components fall under the nominal category. So few examples of nominal account are rent paid. So when we are paying rent, so it is an expense to the company. For example, we'll see what if rent is received. Okay, when rent is received, it is an income to the company. Now here salary is being received, so it is the income to the company. Okay, if salary is being paid, it is the expense to the company. Now bad debts. Bad debts are what? It is the amount that cannot be collected from the customer because he is unable to pay it. So they are what? The losses to the company. Traveling expenses are again the expenses of the company. So nominal account is nothing but incomes, expenses, profits and losses. Okay. So next we'll come to golden rules of accounting. So golden rules of accounting, first is real account. So the rule for real account is debit what comes into the business and credit what goes out of the business. So whatever is coming into the business is being debited, whatever is going out of the business is being credited. Now let's see a simple example of this. Paid cash for the purchase of furniture. Now, what they're saying here is that they're paying cash for the purchase of furniture. Now, furniture is a fixed asset, so it affects the real account. So, here two accounts get affected. First is what? Furniture account. First, we are purchasing the furniture. In return, we are paying cash. So, second account affected is what? Cash account. So, here the rule is what? Debit the debit what comes in and credit what goes out. So furniture account is being debited and cash account is being credited for rupees 2000. So this is what real account. Next is personal account. So the rule for personal account is debit the receiver and credit the giver. Okay, so we'll see an example of this. Now, received an amount of 5000 from Ravi. Now Ravi is what? He is an individual. He is a person. Okay. So Ravi is being related to personal account. So the two accounts which gets affected here are Ravi's account and in return what they're doing? He is receiving an amount. So cash is being received here. So cash account. So Ravi's account and cash account, two accounts will be affected here. Now, received an amount of 5000 from Ravi. So, Ravi is the giver of the good. He is giving the goods. So, what is our rule? Debit the receiver and credit the giver. So, Ravi is being credited here because he is giving the goods and cash account will be debited. So, cash account debit 5000 to Ravi's account 5000. Okay, so this is the example of personal account. Next, we'll go to nominal account. So, nominal account rule is debit the expenses or losses or credit the incomes or gains of the business. So, we'll see an example of this. They're saying rent paid 2000. So, here rent is being paid. Now, rent is what here? Rent is an expense. So, where the expenses are being recorded in the nominal account. So, here nominal account is being affected. Here, two accounts which are being affected are rent account and cash account because we are paying rent of rupees 2000. So here debit the expenses or losses. So what is the expense here? Rent account. So rent account is being debited 2000 to cash account 2000. Okay, so this was an example of nominal account. So the golden rules of accounting, once more I'll explain. Real account is debit what comes into the business, credit what goes out of the business. Personal account is debit the receiver, credit the giver. Nominal account is debit the expenses or losses, credit the incomes or gains. Okay, so these were the golden rules of accounting. Now, how to apply these rules and how to record these transactions in detail, we will see in a next video. So, do like, share, and subscribe to my channel. Thank you.